Welcome to our podcast, where we explore the world of sustainability and social impact. Today, we have with us Lokesh Bora, an expert in sustainable finance and investments. Welcome, Lokesh.
Thank you. It's great to be here.
Today, we're going to talk about the impact of sustainability on financial performance and investor behavior. Lokesh, can you tell us a bit about how sustainability is affecting financial performance?
So, there is growing evidence that companies that prioritize sustainability are outperforming their peers in terms of financial performance. A recent study by Harvard Business School found that companies with strong sustainability performance outperformed their peers by 4.8% in terms of stock market returns.
That's impressive. Can you tell us more about how sustainability is impacting investor behavior?
Absolutely. Investors are increasingly incorporating sustainability considerations into their investment decisions. In fact, a study by Morgan Stanley found that 85% of investors are interested in sustainable investing, and that investments in sustainable funds have grown by over 100% in the past 4 years.
That's really interesting. Can you tell us about any examples of companies in India that are leading the way in sustainability performance?
So, one example is Tata Steel, which has made significant investments in renewable energy and has reduced its greenhouse gas emissions by over 50% since 2008. Another example is Hindustan Unilever, which has set ambitious targets for reducing its environmental impact and has achieved 100% sustainable sourcing of its agricultural raw materials.
Those are great examples. Can you tell us more about how sustainability is being incorporated into investment decision-making?
Certainly, one way that investors are incorporating sustainability considerations is through the use of environmental, social, and governance ratings. ESG ratings evaluate companies based on their environmental, social, and governance performance and are used by investors to identify companies that are managing sustainability risks and opportunities effectively.
What about the role of government in promoting sustainability?
The government can play an important role in promoting sustainability, both through regulations and incentives. For example, the Indian government has implemented a number of policies to promote renewable energy, such as providing tax incentives for solar power and implementing a national wind energy mission.
That's really interesting. In closing, what advice would you give to companies looking to improve their sustainability performance?
I would say that companies should start by identifying their most significant sustainability risks and opportunities and develop a sustainability strategy that is aligned with their business objectives. It's also important to engage with stakeholders, such as employees, customers, and investors, to ensure that sustainability is integrated throughout the organization.
Thank you, Lokesh, for joining us today and sharing your insights on the impact of sustainability on financial performance and investor behavior.
Thank you for having me.